shareholders' equity. Okay, shareholders' equity. You know the we know that the basic accounting equation, right? Assets equals liability plus shareholders' equity, right? So that's the shareholders' equity we talk about. Okay, and we know the shareholders' equity are the two components: paid-in capital and retained earnings, right? Today we're also going to talk about we have one more, okay, components. So so the whole chapter we're going to focus on shareholders' equity. Okay, so if we move the liability to another side of the equation, so then you're going to see equation like this, right? Assets minus liability equals shareholders' equity. So that's why sometimes we call the shareholders' equity is a net assets. Okay, net assets, asset minus liabilities. So shareholder equity is very important for shareholders, right? Because this amount shareholders truly own. Okay, so shareholders are the owner of the company, right? So the owner truly owns the amount. It's called the shareholders equity. Okay, so this is a very important item. And let's talk about the components of shareholder equity. So we have the first component is a paid-in capital, right? So paid-in capital are the paid-in capital are those amounts invested by shareholders. So those are called the paid-in capital from the shareholders, from the owner into the company, right? Those are capital paid in from the owner, from the shareholders. Okay, so those money comes from the owner, right? So that definitely belong to the owner, right? Before belong to the shareholders. So it's part of the shareholders' equity, paid-in capital. Excuse me. And the second component is called the retained earnings. Okay, retained earnings are when a company make a profit. Remember, profit belongs to the owner, right? Profit belongs to the owner. Some part of profit gonna be given back to the owner, right? So as we call that dividends. Okay, definitely belong to the owner, right? Those dividends belong to the owner, go back to the owner. And how about the remaining parts? Those undistributed profit. We will keep those profits within the company. We call it retained earnings. Okay, retained earnings. So those undistributed cumulative profit. Okay, again, it belongs to the owner. Okay, so that's why it's part of the shareholders' equity. Okay, retained earnings. So that's the second component of shareholder equity. And the third component is called accumulated other comprehensive income. Might be a little new. Okay, accumulated other comprehensive income. Okay, but we kind of mentioned this in 121A, right? So we talk about 121A. We talk about those other comprehensive income, right? So we have those four, 1, 2, 3, 4. So those are four special gain or losses. Okay, so those are the unrealized gain and losses. We're not very comfortable if we put it together with the remaining gain or losses in the income statement. So we want to separate. Okay, we want to separate. So those are the four. Okay, so we call those other comprehensive income, right? So let's go over those one by one briefly. Okay. We talk about those parts in 121A, right? Let's just review that. So the first one, you call the net holding gain or losses on investment. So let's say company made investment. Okay, if we have extra cash, we're gonna invest another company's stock or bonds, right? And we classify those investment as called not for sale, right? Sorry, available for sale securities. Okay, we call that available for sale securities. So those securities, by the end of those are stock and bond, right? So the price is going to go up and down. Okay, so by the end of the year, you want to compare with your original cost, right? So you might have because the prices are different, you might have potential gain or losses. Okay, those are unrealized gain or losses. Okay, so we want to classify those as one of the other comprehensive income. Okay, these are the unrealized gain or losses. That's one item of other comprehensive income. The second item of other comprehensive income is also unrealized gain or losses from the amendment to post-retirement benefit plan. We talk about the pension, right? Pension plan. You heard of pension plan, right? To take care of those. We set up money aside. So those money aside to let it go, right? So those portfolio gonna grow, and then you're gonna take care of your retired employee. Okay, and then company also have obligation, right, to take care of retired the employees. So then by the end of the year, so you have the potential gain or losses, okay, from those pension portfolio. So those potential gain or losses and realize is also unrealized gain or losses. We want to separate, okay, so we want to treat it as other comprehensive income. And the third one is the foreign currency translation, the gain and losses and realized gain and losses. So this is talk about international business, right? So nowadays many companies are doing international business, right? So let's say we are doing we buy and sell, right? So the from to the Japanese company, for example, right? So then you're dealing with this the translation, right? The currency translation. You can see that between the U.S. dollars and Japanese yen. Okay, so that ratio keeps changing. So then by the end of the year, so because the ratio changes, we may have potential gain or losses. So that potential gain or losses will be classified as one of the other comprehensive income. And the last one here related to the investment in the derivatives. Okay, so derivatives is more complicated investment than the regular, stock and the bonds. Okay, so because sometimes company need to invest those derivatives. So and then these more volatile. Okay, so so you see the price and go up and down very frequently. So then by the end of the year, so you have just similar to the stock investment, right? You may have a potential gain or losses. So those are going to be classified as other comprehensive income. So then those are the 4 items of other comprehensive income. Okay, again, we want to separate from the rest of the gain or losses. Those are the special gain or losses. We want to separate from the rest of it. The rest of the gain or losses will be reported as one of the net income, right? Because gain is kind of revenues, right? Remember, the loss is kind of expenses. Okay, so that will be the net income item, right? So not normally. Okay, so we have net income item. Okay, and then we also have these special gain and losses. Okay, so net income, again, net income can include revenue, expenses, gain and losses, normal gain and losses, right? But these four, only those four, okay, only those 4 situations, 4 unrealized gain and losses will be separated, okay, from our normal gain and losses. So we call that other comprehensive income. Okay, but remember, other comprehensive income is those special gain and losses. It's very similar to the net income items, right? But these are just special. And you remember why we want to separate? So in 121A, we talk about the earnings quality. If you remember earnings quality, some earnings are transitory, some are permanent, right? So those 4 special gain losses are very, very transitory. Okay, that's why we want to separate. Okay, we don't want to put it together with net income. Okay, but they are very similar to net income, right? So and then net income plus, okay, those other comprehensive income. So now you're going to include all of the revenue, expenses, all of the gain and losses, right? So we call that comprehensive income. Okay, so comprehensive income going to include net income plus those 4 other comprehensive income. Okay, so those are going to be all of the revenue, expenses, all of the gain and losses together. Okay, we call it comprehensive income. Okay, and then we talk about how to present comprehensive income, right? How in 121A, okay? How to present comprehensive income? There are 2 options, okay? One is as additional section of income statement. So you're gonna prepare income statement. It's just like an income statement, right? You start with revenues, then talk about those expenses, right? You got net income, and then you add those 4 additional special gain and losses. Okay, and then by the end, that your total, right? So that's called the comprehensive income. So this is option number 1, okay, as additional section of income statement. And option number 2 is what? As separate statements. So you can now this is up to company, right? Up to the company. Okay, so this company choose, let's say we separate comprehensive income statements. So now we have two statements. One is regular income statement, right? So we have a regular income statement, and then we have a special comprehensive income statement. Okay, so we have two statements. So what is that comprehensive income statement? It looks like this. Okay, so you're gonna comprehensive income statement. You're gonna start with net income. Okay, start with net income, and then you're gonna plus or minus those four special gain or losses. Those are the other comprehensive income. Okay, and then this is the total other comprehensive income. So then you together these two, so that will be the total comprehensive income. Okay, so there's two ways, right, to present, okay, um, the comprehensive income. Okay, two options. Okay, two options present comprehensive income. So no matter which option, let's talk about accumulated. Okay, accumulated. Remember, accumulated net income is what? Accumulated net income, accumulated and distributed net profit is what? Is retained earnings, right? That makes sense. Accumulated and distributed net profit is retained earnings. Okay, so accumulated net income basically is retained earnings. How about accumulated other comprehensive income? We call that accumulated other comprehensive income. Okay, so since net income and and other comprehensive income are very similar items, right? But very similar items. So then retained earnings and accumulated other comprehensive, they are also same type of the item, right? Same type of item. And we talk about the retained earnings, a part of the shareholders' equity. That's why accumulated other comprehensive income is also part of the shareholders' equity. Okay, so shareholder equity have three components. We talk about we have paid-in capital, and we have retained earning, and then we have accumulated other comprehensive income. Okay, so this is example. So shareholders' equity will be reported in the what? In the balance sheets, right? Remember, balance sheet is going to start with assets, right? Then the second part going to be liability, and the third part is going to be shareholders' equity. Okay, so this is a partial balance sheets, partial balance sheets. Okay, what's wrong? This is a partial balance sheet. The statements. Okay, the balance sheets. So so this is the last part of balance sheet, right? So then you can see the shareholder equity section. So you see the paid-in capital. Okay, so this is the first part is paid-in capital section, right? And then you'll see the retained earnings section. Okay, and you see this accumulated other comprehensive income section. Okay, and then we do have another section called the treasury stock, right? You can see that's treasury stock at the bottom here. So treasury stock, remember what is treasury stock? Treasury stock is, if company, sometimes we purchase back our own shares, okay, from our shareholders. Okay, we purchase back our own shares and we keep it. In the future, we might gonna resell it, right? So we call that treasury stock. Okay, treasury stock is our own shares, and treasury stock is a contra shareholders equity account. That's why here you can see we subtract, right? To calculate total shareholder equity, we subtract that $10,000. Okay, so treasury stock is contra shareholders equity accounts. So, but treasury stock is not necessary components, okay, of the shareholders equity. Shareholder equity has only three components. Okay, you can see we have a paid-in capital, retained earning, and accumulated other comprehensive income. So let's look at those little in details. Let's look at paid-in capital. Okay, paid-in capital here we have, you can see now we have two kinds of stock, right? We have preferred stock, we have common stock. Okay, two kinds of stock. So then it tells us each stock, what is the par value, how many shares are authorized, how many shares issued, so then this is what? This here, 40,000 is for the preferred stock, the total par value for the preferred stock. Okay, because see here, 400 shares issued and outstanding, each shares is $100 par value. So 400 times 100. That's how we get 40,000. 40,000 is the total par value for the preferred stock. How about the common stock? Similarly here, we have 20,000 shares issued and outstanding. Each share is $10. 20,000 times $10. That's how we got $200,000. So $200,000 is the total par value of common stock. Okay, and then how about these additional paid-in capital? Those are called in excess of par value. So when you issue those shares, you issue more than its par value. Okay, for example, when you issue the common stock, you issue common stock for $500,000 because what? Because this is par value, and plus this is $300,000 additional par value. Okay, so totally when you issue those common stock, the total issue value is $500,000. Okay, so totally now here you have total paid-in capital. You add those four numbers, and then we have retained earnings, and then we have accumulated other company income. So in this case, other company income, we only have two, right? Two other company income. So that's why you can see those two only. Okay, so this is the shareholders' equity. It's a partial balance sheets. Okay, so we just talked about the components of shareholders' equity. Okay, and then let's compare. Just talk a little bit quickly. Talk about this international accounting standard, right? So IFRS. So you can see IFRS very similar, okay, to the GAAP. Okay, so regarding these shareholders' equity, but just the terminology is still different. Okay, so because in accounting in U.S. GAAP we call that capital stock, right? But international accounting standard we call that shared capital. Okay, in accounting, I mean in U.S. GAAP we call it common stock, and international accounting standard we call it ordinary shares, right? We call it preferred stock, they call it preference shares, etc. Okay, so if you continue, then we call it accumulated. We talk about the accumulated other company income. They call that reserves. Okay, so it's just different terminology. Okay, so the idea they're very similar. Okay. So let's see how many of you guys here. Okay, so I think we have most of you are joined the class already. So let me make an announcement. Okay,